Hey guys, what's up? This is Francisco with Polareso Capital. And today we're going to do a quickly review of the weekly watch list. We're going to go through the Nasdaq Composite, then we're going to go through the XLE, which I think that is the only ETF that is looking bullish at this moment. And if the market is going to bounce, I think that that's the ETF with the best probability of moving higher. So now let's take a look at some of the charts. And remember, guys, that this is only for informational purposes only, and that is based on my solely opinion. So thank you so much, guys, for being here. And now let's get into the charts. So right here, I have the Nasdaq Composite. And as you can see, right, if you follow stage analysis by Stan Weinstein, you know that every time that we move below this 40 week right here, or this 30 week, depending on which moving average you're using, we enter into something that is called stage 4, right? And that basically means that the market has 4 stages, right? We have the stage of accumulation, which is stage 1. We have the accelerating stage to the upside, which is stage 2. Then we get the distribution, which is a stage 3. And then we get the decline, which is stage 4. And now we can see clearly here that as soon as we got rejected right here, we're moving down in increasing volume. So that technically puts the market into a confirmed stage 4. And now that we're starting to break down below these levels and we got that close right at the lows on increasing volume, I think that there's not much to do here in terms of the bullish side. But as you can see also, we are testing this breakout level from 2020. This was the base that we formed between October to November 2020, and then we got that really strong breakout, and now we're testing it. So if the market happens to find support here and we get a bounce into that declining 10-week, probably there's a probability that we're going to get some bounce in some of the leading stocks. So now let's take a look at some of those. So let me show you quickly here XLE so that we can take a look at the weekly chart. And you can see that XLE is basically testing, right, this huge base all the way from 2018. And we can see that we close above it, right? We close above that base on really nice volume, right? It was higher than the previous week, and it was also above average. So I think there's a high probability that if we see a bounce in the market, probably there's going to be a little bit of the pressure taking off from these energy stocks, and probably we're going to see some nice continuation. So keep this on your radar. And now let's move into some of the charts. So let me jump into trading view right here. And for you guys that have been following, you know that I like to use the squeeze, developed by John Carter. This is the TTM squeeze, and you can see that the squeeze is developing pretty nicely. We are actually pointing higher. And I also use the MOXY indicator, which is a momentum indicator. And as long as the MOXY continues to be above 0, there should be positive momentum into this stock, and the breakout should be valid. And now we can see that XLE is trading above that pivot 81.51. We're doing that in nice volume. And in terms of the standard deviations that I use, right, as you can see, the don't pay attention to the lines right here, because these are the weekly lines, and we're going to get new levels for next week. But the long lines right here, these are the weekly pivots, and these pivots are based on the standard deviations of the monthly price ranges. And you can see that we're closing above that first standard deviation, so that should take us to the second standard deviation. So keep this level in your mind. I think this is going to be somewhere around 86, if I'm not mistaken. Let me just move the chart a little bit. This is going to be somewhere around 87.50. So I do think that this breakout might stay. Let's see if we get a little bit of a bounce into the market, and then perhaps we see some continuation in the XLE. So this is the ETF that I'm going to focus on. I don't think there's a need to focus on anything else. And then we can take a look at the USO. And let me just take my alert out of the way. There we go. You can see that USO is also looking fine, right? We have the squeeze, we have the MOXY indicator above 0, and you can see that we're trading right at this pivot right here. You can see that we have a kind of a base information right here. And if we start moving above that pivot of 82.48, I think there's a nice chance that we will test these highs and perhaps continue to move higher. We will have to see, but this is looking fine so far, and we're holding that 50 daily moving average. So now let's go into the stocks that I want to show you. And the first one right here is AMR. And you can see AMR, really nice volume, MOX indicator above zero. The squeeze is rising. And then we got that close above the pivot of 164.69. We got an inside day after this really strong hammer candle of that 8 exponential moving average. And I'm looking for this monthly first standard deviation, which is the H1 in the monthly level. Now let's take a look at DVN. We had a what I like about DVN, for any of you that have read some of Mark Minervini's books, you can see here, you can see this candle right here. This is what is called a shakeout. You can see that the price dropped pretty significantly from that 50 daily moving average, and we had a hammer candle on really nice volume. The dot right here on my chart indicates that there was a lot of accelerating volume to the upside on that day. We can assume it was to the upside because of the closing range of the candle. And then after that, right, we had this continuation, we had earnings, and now we're moving higher on really nice volume. MOX indicator is back above zero, and the squeeze is starting to fire. And usually when we get this kind of shakeout before the breakout, that's usually when we get really strong breakouts. And DBN has been a little bit choppy, and I think right now is ready to move higher in kind of an accelerating fashion. And I'm looking for that monthly second standard deviation calculation. Now let's take a look at this EMO right here. And you can see most of these charts look kind of the same, but are the best looking charts right now here in the market. You can see that we had an inside day right above that 8 exponential moving average. We closed above that 52-54 pivot on really nice volume. MOX indicator above zero, and the squeeze is pointing higher. So a way to play this, right, you can use a stop right below this one, or you can use the 21 exponential moving average and then look for that first monthly standard deviation to the upside as your target. Now let's take a look at MPC. This is one that I'm actually involved with, right? We had earnings, some really nice action in earnings. We had the squeeze. You can see that this one basically, while the market was moving down, you can see that MPC was trading above that pivot, basically trading in a range. And if we happen to see continuation, I think there's a probability that we're going to go for that century mark of 100. Now let's take a look at MRO. And what I like about this one, I didn't pull the trigger on this one because of this candle right here, because we had this selling candle on high volume. However, you can see right now this hammer candle that closed above that pivot of 27.72 on higher volume than the previous day. So this one is looking pretty nicely. MOX indicator above zero. We have a squeeze. We're holding that 50, and now we're trading above that pivot. And we have an inside day. So I'll be looking for these levels right here. These lines right here are the estimates for next week quant pivot levels, but those can change depending on when or depending on where the price actually opens. So you can look at that second standard deviation for the monthly as a target. Then the next name that I'm watching here is PSX. And this one is also looking pretty nice. You can see that we had a really nice base. We had a higher low. We had this move right here. Here we tested the 8. That was pretty important in the price action. And then we had a really strong move. Earnings are out of the way. MOX indicator above zero. We have a squeeze. And now price is trading above that 93.55 pivot. And we actually printed an inside day and a really nice hammer candle. So I'll be looking for continuation into that second standard deviation of the month. Now let's go into the next name. I have XOM. And this one is looking pretty similar to XLE, right? This is one of the highest of the biggest companies in terms of the percentage in the XLE. And you can see also, right, we have the shakeout right here, really strong close. Earnings out of the way, really nice flag here. And now this is trying to move higher. MOX indicator above zero. We have the squeeze. We have some really nice accumulation patterns in this right side of the base, and now we're trading right at that pivot, and we actually close above the pivot. We can see that the closing price was 91.69 and the pivot is 91.51. So I think that you can play this, set a stop below this candle right here, and let's see if we get to that second standard deviation of the month. And then for the last name, here's kind of a more of a speculative play. This plays in UNG, and this is actually the only bearish play that I'm looking for next week, given that the market is trading basically at support. So I'm not looking to short anything at these levels. So that's why I'm looking for some longs in the best looking charts in case if we happen to get a bounce. But this one UNG, I'm actually looking for a short here, and this is what is called a DTSS setup, which is a double top short setup. And basically, the setup triggers when we get a move, we get consolidation, we get another breakout, and then we close below the previous pivot, which is 28.15. You can see that we closed the day at 27.68, and we did it on increasing volume, and we're starting to lose momentum on the TTM squeeze. So you can play this one. You can set a really tight stop. You can use 28.15 as your stop that will be using that pivot, or perhaps you want to give it a little bit more chance and use this high of the candle as a stop. I wouldn't use more than that, because if we actually take this candle, there's probably going to be continuation and there's no need to hold more than that. But you can give it a little bit of room, set your stop here, and then see if this can pull back all the way to the mean, or perhaps all the way to the 50. Remember that from failed moves, we usually get some really fast moves. So this tends to be some really nice trades in terms of risk reward, as long as you hold your stop pretty tightly and you actually respect it. So basically, just in summary, guys, I'm actually looking at the only ETF that I'm looking long is the XLE. And then of course, remember that the market is on heavy distribution, right? This one, if we take a quickly look at the Nasdaq Composite, right, there's nothing to do here. The market is clearly under distribution. We're below that 30 and 40 week. So the market is bearish, right? The market is bearish, price action is bearish, volume patterns are bearish. The only thing here is that we're trading at support. So perhaps we're going to see a bounce, and then we will continue to trade lower. Perhaps we're going to test that 10K level, which is the COVID breakout level. So thank you so much, guys, for watching. Remember to like and subscribe. And then I wish you the best of luck for this week. And if you have any names in your watch list, remember to share them in the comments. And don't forget again to like and subscribe, and also follow me on Twitter at Valerizo Capital is my handle for Twitter. So thank you so much, guys, for watching. Take care and peace out. Bye bye.